everyone, this is the Traded Investor. For our SPY trading for this week, just a quick note on inside day. It is important to understand why inside days are created. Inside days means the high and low of the current day is contained within the high and low of the previous day. So you will hear the term inside day, inside bar. You'll hear inside bar because an inside bar is formed when it's contained within the previous bar. So in any time frame. So an inside day is actually an inside bar of a daily bar, which is an inside bar of the previous day. So if we look at a daily chart, as you can see, today is contained within the high and low of yesterday. And if we switch back to the 15 minutes, you'll see here at 10:30 a.m. Pacific time, there was an inside bar. So that's what an inside bar is. And why are they formed on a regular basis? Well, an inside bar is an indication that momentum is slowing down and momentum is shifting. Price is going to go in one direction and then it wants to pause to decide to continue that direction or to reverse that direction. So an inside bar is formed. So do not panic when you see an inside bar. It just means that from the previous price action, the momentum is just slowing down. Even today, we opened lower than yesterday's close. We went back up above it momentarily, but because today, on Wednesdays and Fridays, take a look at your economic calendars. These 2 days are critical, other days as well, but at least these 2 days. Wednesdays there's FOMC days, and so if there's an FOMC minute like today, we know that the market is just going to wait patiently to see what FOMC has to say, what Powell has to say. That's what is going to happen. So today, right when the FOMC minutes came out, price drove down significantly for a while and then it reversed back up and then it's now coming back down. So there's always this action on FOMC days where price just can go wildly up and down, or it can go wildly in one direction and just continue in that direction. So today is an inside day. And why are they formed again is when momentum slows down and when the markets wants to digest what has happened. By digest, I mean the bulls and the bears are not in a hurry to take charge. They're just waiting to see the other one show their hands. They're waiting to see what's going on, and then the minutes come out, somebody's going to take advantage and drive the price one way or another. So that's why inside days are formed, and it's critical to understand that. So yesterday, when we're looking at our 1 hour demand zone that was blown through here, I left it for today's conversation so you can see it got blown through there, and then the next demand zone was hit and price reversed. And today, when we came down, we didn't even come down to this zone yet. So there might still be additional orders to be picked up, yet to be seen. But yesterday, as I told you, when price gives you an indication of break of structure, this is where you enter. So 442.24 area, did you take advantage from that area to the close of yesterday? Almost $2 move. This is something you should have taken advantage of if you're day trading. That's why you look at the 15-minute chart. So today, an inside day. I don't trade inside days because even at the break of the 15-minute ranges on either direction, I'm looking at headwind. What's potential headwind? To the upside, the mid-range and the high of yesterday, the 50-minute range high of yesterday, both of those were headwinds for us as we were breaking from the 50-minute range high of today. So no need to rush to enter those positions. And then now we will see what price is going to do as we look at the supply zone that is left open since Monday. So is price going to slice through there, or is price going to stall? As I keep mentioning, when you trade with a trend, this supply zone area for me is, because the trend is bullish, it's a momentary pause, or even if there's a short pullback, that's an area where I'll say I'll put my target 1. Not an entry area, but an exit area where I'll put my entry 1, and an entry area to the upside once we break out of it. Once we break out of it and test that zone and continue to the upside, that's the area that I will use for entry to continue the bullish momentum. So today we have an inside day, but keep in mind we have a higher low. So higher low, if price now wants to break these highs, and maybe even somewhere these highs, if you want to consider the wick here as a high, if we want to break this high, then we're going to continue to push up. Otherwise, there might be additional orders to be picked up in this demand zone. So this is why it's important to understand inside days. Nothing to panic. Market is just digesting where it wants to go next. Alright everyone, this is just a quick video that I wanted to do on this inside day, and it applies to all markets, right? So I just wanted you to understand, when you have an inside day, it doesn't matter what market you are looking at. An inside day is an inside day. It's just price is taking a breather from the momentum, and we will either see a momentum shift or a continuation of that previous momentum. That's what we want to trade. That's what we want to see. And we only trade what we see. We don't trade what we want to see. We don't trade what we anticipate. We trade what we see. So any market that you look at, if it has an inside day, it's an inside day irrespective of whether you're doing stocks, ETFs, currency, crypto, futures. It doesn't matter. All inside days are inside days. In some instances, you'll have a break of the inside day like IWM. But in general, that break is not far-lived. So it is still a breather. Still markets are taking a breather. And IWM is leading indicator, so keep that in mind as you trade SPYs. If IWM starts to go one way or another strongly, then be mindful of your SPYs position. Alright, take care everyone, and I'll see you in the next video.